Hi guys, welcome back to the channel. My name is Dave, and today we're going to be talking about TSPY or TSPY from TappAlpha. New outfit, new ETF. This is another covered call income-oriented ETF that uses zero DTE options. I know they just keep coming, so we keep reviewing. But if you're looking for that income, this might be a good option for you. Who knows? Anyway, happy day after. This is Saturday after Thanksgiving. That's always a nice day, right, for everybody out there. Hopefully you had a great Thanksgiving. And this is coffee and Bailey's. And that's 5 seconds you're never going to get back, but we're still celebrating around here. So anyway, TSPY, option income ETF. If that is what you're looking for, please stick around. Whoop. So at this point, I've covered a ton of different covered call ETFs, and I'm at that point now where I need to start to categorize these. So today we're talking about the S&P 500, but there are several that fall into this category, and I think I'm due to put these in order and grade them out so we can kind of have an idea of which ones are our favorites and which ones do we not like. So like and subscribe if you like that idea. I'll be working on that here in the near future. But if I just think about the S&P 500, I've talked about TSPY, which owns the S&P 500. It uses swap agreements to do their call option strategy. But then we have XDTE, which is very similar to TSPY that we're going to be talking about today because it uses zero DTE options. But it also does weekly distributions, which people like that a lot. It doesn't own the S&P 500. It uses a synthetic long position. So again, very different from the first one and different from what we're talking about today. Then we have GPIX. We've talked about that one, and it owns the S&P 500. It sells monthly call options. It does it against a portion of the portfolio to allow for some growth. You get the idea. Then we have SPYI from Neos. We've talked about that one quite a bit. That owns the S&P 500. It sells out of the money call options. It uses those 1256 contracts, which can be a nice tax benefit. Then we have JEPI, the OG, right? That was one of the first ones that really became really popular. Still has a bunch of assets under management. That hand selects different stocks to be in their portfolio and then uses equity-linked notes. Again, different strategy. But all these we can grade out. We can decide which ones are the best. So let's see where TSPY falls today, and let me know down below which is your favorite. TSPY is the TappAlpha SPY Growth and Daily Income ETF. And consider this a first look because this is a brand new ETF that started back in August of this year. So I wouldn't jump in with 2 feet saying this is the answer that I've been looking for in my portfolio. I would probably slowly build this position as you explore it a little bit more yourself. So study the option strategy that they're using, kind of follow along with what the fund manager is doing and see if it works. That would definitely be my approach. And I've just watched this one a little bit again, so this is a first look, and I'll come back to this and I'll continue to study it and see how he approaches his option trades and see what the performance looks like as well. So TSPY, it only has about $8 million of assets under management. Again, brand new fund, just started. The expense ratio is 0.68%. That's not great, but in comparison to a similar product, which is XDTE, that's about 2/3 of that one. I believe that one's around 1%. So better expense ratio than a similar product. So again, tip of the hat. We're moving in the right direction. Distribution rate shows around 13% based off of the first 2 distributions. I think that's all that we've had so far. So we'll see where we end up. I like this approach more myself. So if you look at the investment objective here, it says seeks current income while maintaining prospects for capital appreciation. That speaks to me. So 13% is more in line with historical market returns. So if you're distributing that, I wouldn't expect a lot of capital appreciation. But we'll see over time how that plays out and what those distributions look like as we have more time under our belt. Now, you know me, I like to trade a lot of my own options if you follow along on this channel. But I've been building a portfolio, so I'm looking for opportunities like this to add small positions over time with things that I think can, allow me to build out an income style portfolio that I don't have to manage. It's my idea of the little Bob Ross happy little trees approach to investing. So if you don't want to manage your own options, maybe this is an approach that you can take as well. But 2 distributions so far, and a distribution rate around 13% is what we're looking for the whole year, right? So about a little over 1% on a monthly basis. We'll see how that performs in a down market, in a sideways market, in an up market. We want to know and have all that information. So again, I wouldn't invest everything I have right now into this ETF. It's brand new. I would maybe buy a little bit and watch it and study how they manage those option positions. So TSPY, the fintech-powered ETF designed to capture S&P 500 performance and daily potential income generation. Again, this is going to be using SPY, and it's going to be selling 0 DTE options. Every day it's going to set up a option position and try to grab as much of that income as possible and distribute it out to us on a monthly basis. So growth, direct exposure to the largest and most liquid index tracking ETF in the world, the S&P 500, very impressive. All right, income generation, our strategy identifies and analyzes various dynamic parameters, increasing the potential for consistent additive income generation. Fancy. AI powered, right? So we're trying to find ways to generate income by selling these calls. By writing call options each trading day that expire the same day, so write them in the morning, expire in the afternoon. TSPY seeks to capitalize on the rapid time decay inherent to 0 DTE option positions. Obviously, this is all the rage these days, right? Selling 0 DTE options. So a lot of times I'll sell something out 3 months into the future. Time decay initially is very slow, right? That theta decay is very slow. You get within a month, it starts to pick up steam. Get within a week, it's very fast. The 0 DTE option, that's the most rapid time decay. That's what they're talking about. It's also when you have the most volatility in that last day. So that can work for you or against you, in my opinion. Reduced time risk. The daily expiration of the option minimizes prolonged market exposure, seeking to reduce unfavorable shifts in the underlying security. Again, just having traded lots of options, it depends. So if I sell out way out in the future, let's say 3 months, maybe I can sell 8% out of the money. Whereas with this, they're not going to be able to sell that far out of the money. So on a daily move that's very large, they might be capping their upside and really missing out on some information that came out in the market. Whereas if we're just kind of trading sideways and then I sell 8% out of the money, I might be able to capture all of that large market move in that single day. It really just depends on the situation, right? So on a daily call option strategy, you can miss some really big moves that happen intraday when somebody comes out and makes an announcement. Now, a lot of times that volatility is priced in if it's something known, and they're supposed to be adjusting for that based upon what I read. But we'll see over time how this performs. And the last thing here is, as market conditions change, so did the fund's positions, offering the best chance to participate in both the underlying securities performance and the simultaneous harvesting of daily option premiums. So this is a managed ETF. They're making daily decisions on what strike price, how far out of the money. They're going to set up their calls, and if they might even roll intraday. So there is a lot of flexibility in their strategy here. So if they're performing really well, maybe this will be the one that you've been looking for. Or maybe you'll find out that those decisions powered by AI are destroying the fund and it's terrible. You never want to take another look back. We'll find out. It's so exciting. Anyway, if you scroll down a little bit further, we're going to find a nice little video here that you should watch if you're interested in this fund from Psychotera. I believe that's his name, talking about his fund and a little bit behind the strategy. So worth watching. Take a minute to do that. At a glance, shares outstanding, yada, yada, yada. Inception date, again, 8/14. So brand new. Price performance, actually show it versus market price versus NAV. So floating just slightly right around the NAV price. Distributions, again, we've only had 2 so far. A third on the way, should be announced here in the next couple of days. So we'll have a little bit more information there. This is one that will likely have return of capital as well. Most of these will. Holdings, you can see there too. The last couple option trades down here at the bottom, SPXW. So these will have those 1256 benefits, those tax benefits, which is great. I think that's really important, especially if you're doing this in a taxable account. And same with XSP. So that's the S&P 500 mini that you can trade options against. And I imagine that they're doing that only at this time to fill out the full fund because they sell against the whole notional. So I'm guessing that's why they're using 12 of these and 9 of these to make sure that they're selling enough against the whole thing. And I'm glad they're not using just SPY. I'm glad they're using this so we get those tax benefits. So let's take a look at the prospectus and kind of break down the strategy behind the options that are within this fund. All right, prospectus reading time with Dave. First of all, expenses 0.68%. That's $68 for every $10,000 you invest. Call that 68 basis points. But we're more interested in the principal investment strategies. You can find this in every prospectus that is like this. So seek this out and understand the strategy that's behind it. So I highlighted some of that for us. First of all, the strategy is a daily covered call option strategy that sells out of the money like that. Call options with 0 days to expiration, each day known as a daily call. Through this call option strategy, the fund sells or writes exchange-traded call options to generate income from option premiums. These may include, but are not limited to, selling call options on SPY or selling call options on the S&P 500 index, which is that SPX that I pointed out, or selling CBOE mini SPX index call options, which are XSP, more affordable than SPX, or think about it like fitting puzzle pieces together so they can sell against the whole value of the fund. XSP options are designed to track the S&P 500 index but trade at a smaller size compared to a standard SPX options contract, so not as expensive to sell those covered calls. While the fund expects to primarily invest in daily or 0 DTE call options, the fund may use options expiring weekly to accommodate defensive actions if needed to prevent against a loss of premium or a capital loss. We call it defensive. You can say rolling. You can tell me whatever you want. The magic of rolling options. But if I sell a call option at a strike price of 105 and it goes to 106, I'm capping my upside. I miss out on that last dollar. But I can roll my option out, especially if it's a 0 DT option, maybe out just a little bit more to the 107 strike, 108 strike, who knows, above that strike price out into the future, buying myself some time. But I still lost on my first option. I'm just trying to make up for it, right? I'm trying to cover it up like a kid in school. I screwed up, Dad. I did terrible on this first test, but I'm going to make it up on the next test. But that's the idea, right? They're giving themselves some flexibility here to roll out in time into the future. To implement the fund's investment strategy at the beginning of each trading day, the advisor sells out of the money same-day call options on SPY, SPX, or XSP between 0 and 5% out of the money at the time of purchase. I suspect that this 5% is going to be extremely rare, probably never. It's usually going to be 0 to 1% because it's a daily call option strategy. It's probably going to be 0 to 0.5%, right? So the other day it moved up. On Friday, short trading day, it was up about 0.75% or somewhere in there. So I'm sure they capped their upside on that day. They still got the benefit of owning the S&P 500, the underlying. They capped it by selling that call option, but they captured some income as well. With respect to the fund's covered call options, the advisor covers the entire notional value of the underlying security. So they're trying to sell against the full value of the fund. So this is where I think it's really important from a growth investor's perspective or somebody that's looking for long-term growth to pair this up with the underlying. So buy some VOO, which is also the same as SPY if you're not familiar, but is a little less expensive to own. So buy some of that with this. If you don't need the 14% income, which I hope you don't, hopefully you put yourself in a position where you don't need that, then if you have, let's say you want to invest $10,000, maybe you buy $7,000 of this and $3,000 of the S&P 500, giving yourself some growth. It's like you're creating this own version where you don't sell against the whole value of your fund. And I think in the long term, you'll probably benefit. And then you do all the other things that we should be doing as investors, like living below our means, paying ourselves first, yada, yada, yada. The fund is managed in a way that seeks under normal circumstances to provide monthly distributions from a stream of income based on call option premiums received. There is no guarantee, however, that the fund will make a distribution in any given month, and the amounts of that distribution may vary greatly from one distribution to the next. So they expect some peaks and valleys, but for the first two, they were pretty consistent. So we'll see where that goes. The goal is to keep it flat, I'm sure, but they're not always going to be able to do that. So just be aware. Income generation. The advisor's technology identifies the optimal strike price daily, factoring in market volatility, historical data, planned market events, and other dynamic parameters. So this is important, right? This is one that's using some technology to give some guidelines on what strike price to sell against this position based on data that they're putting in. So that's what we really want to follow along over the long term and see how it performs. So pay attention to that. See what they're doing on a daily basis. They've got a little link there as far as their holdings go, so you can see daily what their position looks like. And kind of study it, understand a little bit more about it. That's your homework. And mine, I suppose. I'll do it. We'll have a follow-up, like I said. Maximize theta decay by writing call options at the beginning of each trading day in the morning that expire that same day. The advisor seeks to capitalize on the rapid time decay of the options. We kind of covered that already. And then this is what I found really interesting. One of the nuances of this particular fund, flexibility. As market conditions change, the advisor will adjust its position daily to realign with the underlying security's price trajectory. So they have flexibility in here. So I saw that they can roll options intraday. So suppose you sell an option against the S&P 500. Let's say it's at $100 a share and you sell the 105 call option intraday in the morning. And the S&P 500 drops 5 points down to 95. Well, if you want to be active with that from an options perspective, you might roll down to the $100 strike and try to capture some more income before the end of the day. So they're leaving themselves that ability to do that. And they've also covered about rolling out maybe a full week if necessary. So they're offering themselves that flexibility. So again, our homework is to find out if this makes sense and if this works, if this AI generated strategy that gives them guidelines when he puts on these trades is effective. That's our goal. That's what we need to figure out. And as I mentioned, you can download and take a look at their daily trades. They put them right on there for you to look at. And you can see that these are the ones that they had for 11.29. So again, that was a short trading day. And they had that 60.20 strike price for the SPX and XSP. And you can see the amount. So at 60.20, if I pull up the S&P 500, hopefully this all fits on the same sheet here, you can see that we ended up at 60.32. So we did cap our upside a little bit with these calls that we sold, but we got the benefit up to that strike price. So overall, probably did okay for the day, considering that we were up about 0.5% on the day, depending on where they sold these exactly. So looks like they sold them a little bit out of the money, so they would have got the rise in SPY, and then they capped it. They got to keep that income. That income gives them a break even. It's probably slightly above that break even. So overall, they probably underperformed, I'm guessing, the S&P 500 gain for the day because the S&P 500 had an up day. On a down day, they would have kept all this income and it would have outperformed the S&P 500. That's just how these tend to work. So it lowers the ups and downs of our portfolio. Sometimes we say the beta of our portfolio kind of smooths out the ride. And that's the overall running idea here. They do distribute income, but overall we're just trying to sell these calls and capture some of that upside as much as possible through their strategy. So now let's jump over to Seeking Alpha and take a look at TSPY. And you can say it with me now. I'm sure you've heard it enough. But I'm a Seeking Alpha affiliate, and there are affiliate links down below if you're looking for a stock and ETF research tool. This is the one that I use all the time. I think their Black Friday event is still going on, so I'll put that up here right now. But a great product, especially for alternative investments like this, such as TSPY. A lot of times people will start jumping in here and posting articles and giving you a better breakdown of these products, especially as time rolls by. So check back for more information on TSPY and check out that affiliate link down below. Expense ratio, as mentioned, 0.68%. Sends money out to you every single month. Dividend rate right now is don't really count on that. Yield shows 2.17%. So that's based off month 1 and month 2. So just over 1% a month, tracking towards around 12 to 14% on an annual basis. Again, they said that'll float up and down. Small fund right now, just about $8 million. So we'll see where we go with this fund and this fund manager and see how it develops. You can check out the holdings, but we know it's just the S&P 500 and then a covered call strategy. If we want to compare this to some other similar products, in this case I picked XDTE and QDTE, which is based on the NASDAQ, but from the same family that uses daily covered calls. Kind of see how it's performed since inception, which is very short, so you can't take too much out of this, but you kind of see how it's tracking currently. So this is looking at the total return, so that factors back in those distributions that we get. You can see that TSPY has actually outperformed everything that I have up here so far over this very short time frame. So TSPY up 10.19%. We have the S&P 500 up a decent amount, lagging everything during this short period of time. XDTE from Roundhill, which I've reviewed. I do not own, but I've reviewed it. I'll link that video up above if you want to check either one of these out. Up 9.24%, and then QDTE up about 10%, 9.97. So yeah, it's held up pretty well over this short time period. So again, I would like to see some more information before I start plunking down a bunch of money on it. But if you want to buy a few shares and see how it performs in your portfolio and mix this into the basket of covered call ETFs that you might already have, maybe one worth starting up a small position. And if we want to compare TSPY and XDTE, similar performance, but the expense ratio for TSPY, 0.68%. For Roundhill, I see that it's 0.95%. Again, for me, that's a driving factor. I hate these fees. They are not going to do you any favors, so the lower the better from an investor's perspective. So in that case, I have to give the little tip of the hat to TSPY when it comes to that expense ratio. In the long term, that should help you have a better overall return. And I should also add that when I compared the two, TSPY and XDTE, as far as the option strategy, they have the exact same strike price sold. Now again, I need to probably watch more days in a row before we really go into this and start giving a recommendation one way or another, but very similar strategies as far as that goes. Whereas TSPY actually owns the S&P 500, XDTE uses a synthetic long position. So again, a little bit different, but definitely two products that you can compare side by side. So that's a quick first look at TSPY from TappAlpha, brand new fund covered call 0 DTE option income ETF to add to our list. Now, I don't own any shares of this currently. I'll be looking at doing that down the road. Maybe if it continues to perform well, I'll let you know. But let me know what you think about this one down in the comments. Like and subscribe. And again, we'll be comparing all these together soon, hopefully adding some grades and picking out some of our favorites. So let me know what you think about this particular product. Have a great night. We'll talk to you real soon. Take care.